इतना सा फर्क है कुछ होने में और बहुत कुछ होने में। इतना सा फर्क है एक बार सोच के छोड़ देने में और लग के कर दिखाने में। मान लेने में कि जिंदगी ऐसे ही कटेगी और सुबह 4 बजे उठ के सोचने में कि अभी तो बस शुरुआत है। किसी मैगजीन को हाथ में लेने में और उसी मैगजीन के कवर पेज पे होने में इतना सा ही तो फर्क है। वीआईपी सीट में और उसकी पिछली सीट में इतना सा ही तो फर्क है। वो जिसका मैदान ही खुला आसमान है वही कल जमीन पर तो था। पूछोगे तो बताएगा वो पंछी। ये एक दायरे में सिमटने में और पूरी दुनिया को दायरा बनाने में बस इतना सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानकुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और 7वें आसमान में फर्क बस इतना सा। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ मैं बना हूं उन फिजाओं के लिए, कि हाँ मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत है पर नामुमकिन भी नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया।
Hi, good morning, everyone, and thank you so much for joining us on this weekly webinar series called Start Your Own Franchise Business, presented by Franchising. We do this webinar every Thursday at 11 a.m. This webinar is about exploring different aspects of starting a franchise business, like how franchise works, why it is one of the safest and the fastest growing franchise business model in India, what to look for in the right franchise opportunity, and we'll also showcase a few profitable franchise brands across industries like food, retail, education, and many more. So whether you are an aspiring entrepreneur, a working professional looking for a passive income, or a business owner wanting to expand into the new verticals, this session is just to design for you. We'll also share insider tips on how to minimize the risk and maximize the return and evaluate the franchise agreement with confidence. My name is Bharat and I'm joined with Ms. Sonia Chaudhary. She's the Managing Director of Franchise India Group, along with my colleague Kundan Lal. He is the business head, Friend Enterprise Pune, along with his team. Akash has also joined. So by end of this session, you will not have only the clarity on how to start your franchise journey, but also will help you gaining access to curated franchise options that suits your investment range and location. Feel absolutely free to ask any sort of questions that may arise in your mind related to franchise. We will get back to you with the answers once the presentation is over. I mean, by the time you can share your queries into the Q&A box. You have two options if you have joined through the mobile. You'll get two options. One is the chat and the other one is the Q&A. You can use the Q&A option. You may mention your, what you do, which city you're from, what is your investment amount, and if any particular, the business category you're looking for. So that is all about in today's webinar. I would now request Managing Director of Franchise India, Sonia Chaudhary ma'am, to please take the lead and let's get started. And yeah, over to you, ma'am.
Thank you so much, Bharat. And friends, a very good morning to all of you. I welcome again on today's webinar. And the webinar is about taking a very important decision of your life, which may be only once in your life, unlike many other decisions, including investment decisions that you may take more than once. And this decision is that of starting your own business. So I'll just extend a little bit on what Bharat said. So we are splitting this webinar into two parts, where the first part will talk about the most important, I would say, the assessment tools which any business buyer, investor, or a prospective franchisee should undertake before deciding and signing a business deal with any of the companies. And the second part will run you through three franchise opportunities for today. And these opportunities that we represent are across different industries. So there are three brands that we'll represent today, including one of the brands from the Reliance Group. So I'll also request all of you to make this webinar interactive. Any questions that you have on our process, on the industry at large, any particular investment opportunity or industry that you're considering, we'll be happy to answer and take these questions so that it can help also your friends who have joined in. And I'll also request all of you, friends, because we'll talk about ourselves, what we do, but equally it is important for us to know who all have joined on the webinar. So four things, I'll request all of you to go on the chat box or the Q&A box. And I'd like you to maybe put your remarks and comments there. So first and foremost, if you can tell me what city that you've joined in from. And second is if you have any specific category or industry at large that you have narrowed down your interest to invest in. And third is a bit about yourself, which means what you do. Are you a professional? Are you already running some form of business? Are you a franchise operator already? So these questions will help us to understand where you come from, what industry you are considering, and also your profile. And finally, also, if you can give us some understanding on the kind of investment that you're considering to put in the business. So these are four things I like to understand from all of you. And while you do that, let me also start with giving you a little background about our company, Franchise India. So at Franchise India, I would say we all understand, buying a business is one of the most, crucial part of anybody's lifetime and a very important decision to be taken. And we also understand that today business buyers like you don't need just product information, because product information today is easily and readily available across all platforms. Even if you go on the website of Franchise India or you go on the site of respective companies, the information is easily accessible. But what is missing is the insights, the analysis. Right? So that is where our teams at Franchise India help you and guide you through this entire journey of buying a business. And it is very important that you invest in a business that you have known and you have studied enough. And this was the grounds for us to come out with these advantage series that we call investor advantage. So how a prospective investor like you can be at an advantage of taking a responsible decision of buying a business. So this webinar will give you a guided assistance in buying process, as we understand franchisee, an entrepreneur, a business buyer like you moves through a series of purchasing cycle, and educate yourself in order to move closer to making a final decision, which I believe, can be anything between 30 days to 90 days on an average. And being an investor-centric and a franchise-focused company, our endeavor has always been to advise business buyers like you on business opportunities, but most importantly, how to evaluate these opportunities, how to narrow down your interest. And hence, these series are for you to take a well-informed decision. So our company, Franchise India, we have a strong team which is present across 97 cities in India. We come with 28 years of experience in the industry. And we also have a presence in about 15 countries outside India. In the last 27 odd years, we have facilitated business buyers for nearly 10 million investors through our media business. And also nearly 1 million investors, business buyers, where our teams have directly worked and guided them through their decision-making process. So investor centricity has been our focus. We work to bring solutions for business buyers that are based on our tried and tested methodology for the last 2.5 decades. And we advise on appropriate fitment of opportunity with the profile that you come from with respect to the market where you want to open. So a lot of nuances and various aspects actually blend together to take this very important informed decision. And at Franchise India, I would say that we are proud and at the same time also humbled to have worked with this ever-growing community of aspirational entrepreneurs like yourself, which today is a very evolved community, as the awareness of brands, the opportunities have come a very long way from the time that we started in 1999. And at the same time, we also work with some of the most credible companies, brands, enterprises, which includes right from, I would say, startup companies, family-owned businesses, to the top enterprises and corporates of India, which includes the like of Reliance, Aditya Birla, Tatas, and similar groups. And there are over 10,000 franchise deals that we facilitate every single year. So almost 10,000 investors, franchisees is something that our teams, through our process, our guided assistance, we help investors to make an investment. The average investment, which most of the investors make, if I have to take an average, is close to about 50 odd lakhs, because we have investments which can start from 20 odd lakhs and goes to even 100 odd crores, depending on the industry, the category, and the size of the investment you're looking at. So, as a prime mover of the franchise ecosystem, we have built a very strong equity with our investor business buy group, and we engage through our platforms. They take advice before investing in a business opportunity on one side. And we also offer a very strong proposition to companies, franchisers, where we offer complete solutions. We work with them to make them franchise ready. We also work with these companies to expand their footprint, where these companies give an exclusive mandate to Franchise India to find the right fitment of the partnership. So quickly, what I'll do is, friends, I'll take you through a little understanding on the franchise industry at large. I'll talk about the 5 assessment tools which any investor must undertake before deciding on the business opportunity. And then we'll come out in the last phase, where we'll talk about 3 opportunities which we would share with you. So if you look at franchising, because the one big question that comes across is why franchising, and why not, start your own business? So anybody who's looking to start any form of business, there are only 3 ways people can start a business. One is your own startup, which is your own business you run and operate by yourself. Second is you buy a existing business, which means you take over the business, which is, I would say, a resale business, where you get all the business from somebody who's operating that, and you take that over and become the owner of the business. And third is a franchise business, which is tried and tested. Companies give you training, they give you all SOPs to run and operate the business. So at Franchise India, we work on the latter two, which is any kind of resale opportunities. If you want to invest in running businesses, we can help you buy these running existing businesses. And second, we have a large portfolio of almost about 10,000 brands, which are actually very actively franchising across different industries, segments, different investment brackets across the country, and almost 600 brands globally that we have exclusive mandate to represent in the Indian market and also the subcontinent where we are present in. So how big is the opportunity in franchising is something which is very important to be understood. So when we look at investing in any industry, the first question that comes to our mind, the first thought that comes to our mind is how big that opportunity is. Is it going to be relevant in the times to come? Is it going to sustain in maybe the next 5 years, 10 years? So let us reflect upon and understand how franchising and entrepreneurship has also evolved over the decades and where it looks like heading in the next 10 to 20 years. So if you look at India, India today is the largest franchise market in the world. We have a big powerhouse of consumption, and we are sitting on the best opportune time when the entire world, I would say, is looking upon India. They're entering Indian market. And the next big investment opportunity for the world is also India. Our current fundamentals of economy also signals the market enormous potential. And India is today a very big powerhouse in the globalized world. So franchising, I would say, is a very big impact market. And why it is a very big impact market? Because everything that we consume today comes from a franchise business, and franchising cuts across every industry. This is one question which is also very, very regular, I would say. When I speak to investors, I meet with them, which is the best industry to invest in. So franchising cuts across every single industry. We've all seen successful franchise companies across all segments, all sectors. But it is important that you find your own fitment of what category, what business is right for you, right? So in system sales, the franchise industry globally is about $5 trillion, which is even bigger than the GDP of India. And India today is the second largest economy when it comes to franchising. We are already at about $180 billion. And the size of franchise industry is increasing at a pace of almost 30% year on year. And majority of this growth is coming from a lot of corporates today, if you look at the companies, when we started 27 years back, we worked with corporates, but there were very handful of companies that were franchising that point in time. Only 300 companies way back in 1999 that were actively franchising. And majority of these companies were larger groups like education companies and some fashion brands like Aditya Birla. But today, when I see, there are almost more than 10,000 brands which are actively franchising. And what has changed in the last 5 years is there is a big corporatization of franchising which has started to happen. Even companies like Tata's, companies like Reliance, which were not franchising 4 or 5 years back, and even companies like groups like even Kalyan, the jewelry brand, Indriya, which has just been launched and they're franchising actively now. They all are looking at partnership because they want to make their business asset light. They understand the systems and processes, and they pass on their entire learning to a franchisee. So that is one side, which is a big demand, I would say, and equally the supply side from the brand side. And a very big demand I see, which is also coming from a lot of professionals today and also first-time entrepreneurs. So today, almost 100 franchise sales on every 100 franchise sales which is done in the country or sold through our platform, it is done by first time entrepreneurs or first generation entrepreneurs, where these investors, or I would say entrepreneurs, have prior no experience of running and operating a business. And 20 years back, this number was very, very small. Out of 100 businesses that were sold, only 20% of these businesses were taken by first generation or first time entrepreneurs. So there's a big rise in terms of the profile of people who are getting into the business for the very first time. And the second area which I want to also highlight is there's a big formalization of consumption. So there are no two doubts about how the consumption in India is a very big story, but there's a big formalization of consumption that is happening. So when I say formalization of consumption, everything that we are consuming today, whether that's a product that we consume or a service that we are consuming, all these services and product today are coming from a branded environment. So there's a big consciousness and demand for branded product and services. So what we witnessed 22 years back, we witnessed a big modernization of retail when we saw all these retail fashion brands coming and actively expanding their footprint through their equity stores and franchise stores. It is now the time for also modernization of service industry, which is becoming branded, from laundry services to your home to D2C healthcare services at your home to even cleaning services, and even the quick commerce services that we consume from brands like Zepto and the likes. They all use franchising as a route to expand. And finally, I'll talk about also the legacy, which is the entrepreneurship legacy in India. Franchising and entrepreneurship are very, very proportionate. So we understand that the opportunity today is as big as the nation, because every home in India has somebody who wants to start a business at some point of time in their life. And India has emerged today as a global powerhouse and a capital of startups. Nearly 100,000 startups are there in the country. More than 108 unicorns are there in India. And being a shopkeeper nation, I would say there's a big aspiration for people to start a business. So franchising and entrepreneurship is proportionate. So as the need for entrepreneurship would go up, so would be an increment in the way that we see franchising is growing. So what we understand that starting a business is not easy, and especially I would say building a successful one is something which is even a bigger challenge, or I would say a real challenge. And successful investing is all about three things, and I call that CAP, which is CAP, which is about clarity. Second is the alignment of your goals. And third is the preparation that you need to make and start, make an investment and run a business. And a sustainable business is one that reflects on your values. It leverages your own strength. When I say your strength, anything that is beyond capital that you bring on the table, and it contributes meaningfully to the life and community that we are servicing. And for the first time business buyers, the journey is filled with a lot of questions, a lot of uncertainties, and the need for informed decision making, I would say, is even higher for first time business buyers. And so why many businesses fail to start or even succeed? And there are many reasons, but I would say some of the most important reasons is first and foremost is lack of risk management. Right? So what is the capital that you bring in? How much equity you bring in the business? What is the debt you want to take? Second is wrong location chosen, wrong industry chosen, or the wrong brand fit that you have chosen for a market. And the third, I would say there is a big misalignment or no alignment between your personal and business goals. So these are three important reasons, I would say, which lead to failure or to start a successful venture. So how do we mitigate that? We have developed an assessment tool that helps us to mitigate these challenges. If you can place that on the screen, Bharat, if you can. Yeah. So these are 5 assessment tools that is very, very comprehensive, which starts with first and foremost, I would say self-assessment. That to me is the foundation of the business. And then we go on to the assessment of the industry that you want to invest in. And third is the market assessment, which is a very detailed market assessment of the micro market that you want to operate the business. And then comes the competition assessment, which is the peer-to-peer competition. And finally comes the brand assessment, the brand that you have chosen to invest. So I'll go on briefly to even discuss under these 5 assessment tools. What we have done is we have created 25 point criteria for you to assess the viability of running these businesses. And they're overall these 25 odd points that we have created. So if your overall count, when you tick mark against these assessment tools, if your tick mark on these assessment tools is 20 plus, then your selection of the opportunity is excellent. If there's a 15 to 20, it is good, reasonable enough. But if your overall score on this chart is less than 15, then we don't advise you to take that opportunity. Maybe we rework where we have gone wrong. It could be the industry. It could be the industry and the market where you want to open, a misfit of that. It could be a misfitment of your personal goals and your financial goal. So let me start with self-assessment, because I believe your business is only as strong as your own clarity, like I said, and self-assessment is the most valuable tool for aspiring entrepreneurs. You need to be extremely honest about your own strength and weaknesses. And self-assessment, like I said, is about clarity of your goals. And some of the key aspects here is the business knowledge, the experience that you have. It complements the business that you want to take. Second is your investment appetite and the financial ability to either raise funds or put your own savings or equity in the business. And third is the time commitment that you have to put in the business. So these are 3 common and most important, I would say, key aspects that should be considered. Now, the core pillars under our own self-assessment includes first and foremost, I would say, the financial goals. So what we use here is the TRR rule. So TRR stands for the time, T, risk for R, and the second R is the return. So time, risk, and return have to be weighed and we need to analyze them. So when I say time, this is a timeline for you to achieve your financial goal. It can be a midterm goal, it can be a long-term goal, it can be a short-term goal. So based on the timelines of your achievement of these financial goals, the opportunity should be selected. Second is the return that you expect on the investment. And third is the risk that you're willing to take for the investment that you're putting in. Now, when we look at different asset classes, now this is true for any asset class, whether these are passive investments or active investments like in franchise business. Different asset classes can be categorized into 3 fundamental goals. And these fundamental goals are first, safety. Second is income, and third is growth. So wherever we put our money, these are the only goals that we have in our mind. That's safety, income, and growth. And similarly, franchise businesses also operate. So if you're looking at safety as your fundamental goal, naturally your risk and reward will be proportionate. So safety means if you're looking at businesses which do not have high risk, but when we say we don't need a high risk business, these are equally less return on the capital. So a lot of franchisee and company operated businesses that are also very active in franchising. So anytime a company is offering a franchisee and company operated business, sometimes the companies take a high risk and they mitigate the risk of the partner. So which means that your return would be lower because the risk is taken by the company. If you're looking at income centric investments, your risk would be moderate and your returns will also be moderate. But any growth centric opportunities would come with comparatively high risk and high rewards, which can be a larger investment opportunities or a master franchise opportunities that you want to take either for a region or for the entire market. So this is the first area that we need to have a lot of clarity on. Second is capital planning, which is extremely important. I'm doing a project with a company called Indriya, which is one of the brands launched by Aditya Birla Group. And they have a requirement, while the investment is very large, which is almost 50 crores to become a franchise partner with Indriya. But company has certain requirements. They want their partner to bring in certain level and certain ratio of their own equity, and they don't want their partners to be over leveraged. And this is extremely important because all that goes into your qualifying criteria also with the company. So capital planning would mean what is the debt in the equity that you want to put in the business. What we advise is a 50-50 rule, which means 50% of your equity and 50% is the softer loan that you can take. But if your overall investment is lesser than, say, 40 odd lakhs, then you bring in a larger equity, at least 70% of the equity you bring in, and 30% is a loan that you can take or a debt you can take on the business. The second area is the commitment of time, because all small businesses require a lot of active involvement, and franchisees' own time commitment is very crucial even for a brand to decide him to onboard as a partner, because unit efficiency comes in running and operating when a franchisee is himself involved into day-to-day operations. Exceptions are franchisee and company operated businesses where the company operates and franchisee in sometimes is just a passive partner. He just puts in the investment and the company is involved in day-to-day operations. But all the franchisee and company operated businesses come with comparatively larger investment, and most of the large companies do that model because complexity of owning and operating the business is more difficult in these businesses. So company retain the operations with them and they bring in a partner who make a financial investment in the business. Second comes the assessment of the industry. Now, not every performing industry, I would say, is right for you. While they're all great industry, but every performing industry is not right for you. So what we have to do is we conduct a deep research before selecting even a sector. So what you need to evaluate is the overall industry trends, the life cycle of the business, which means where the industry is currently standing at, what is the future fitment of that industry. Is it at an emerging stage? Is it at a growth stage? Is it at a maturity stage? And when companies, especially all the large corporates, when they come at a mature stage, there are very few markets where they want to enter, right? So when I work with some of the companies which have a good distribution across India, they give us very remote locations. They want partner to bring in, and or they would give us locations where they want to replace a partner, right? So we need to evaluate the historical patterns, any recent disruptions in the industry, any future shifts that we foresee coming in the industry. These are very important to understand the industry trends and the life cycle. Second is the long-term relevance of that business or the industry. And I call that future fitment of the industry is very important because investment is all about anticipating the future. Is the industry aligned with the long-term consumer behavior? Is it aligned with sustainability? Is it aligned with digital transformations? Is it aligned with regulatory trends or not? Is very, very crucial. Right. So if I give you examples of sectors like renewable energy, clean beauty, preventive healthcare, these are all future fit businesses. While as we speak today, these are just at a very initial stage, or I would say just emerging stage, but these are some sectors which are future fit industries. The third is to understand the growth prospect and the demand and the supply gap in the industry. So you need to assess whether the market demand outpaces the supply. So we are creating opportunity there. And if the market is overcrowded, it causes margin pressure. You know, any market that you enter, which is already overcrowded. So if you take an opportunity of a similar to enter that market, there is always a margin pressure that business would always be in. And it becomes difficult for you to make financial sense. Your margins are under pressure because you already have a market which has oversupply of that particular category of brands. And only if you have a brand that you have chosen where people who are consuming those services or products have a reason to shift, only then it makes sense. Right. And third is innovation adaptability. So our companies innovating in product, their customer experience, technology adoption, or business models to go to the market. A lot of companies, again, I go back to Indria because just before coming on this call, I was on a call with one of the investors for Indria. So Indria also has a model where for their few initial investors, because they are new to the market, for the few initial investors, they have a very attractive go-to model where they are giving 2 years of minimum guarantee to their partners. So every business, when they're new to the market, they have some attractive incentivization for their early partners, which they bring in. So that's another area to be understood. And third is the market assessment, which is the go-to market intelligence is something which is deeply required for the market where you want to operate the business. Now, your focus areas has to be overall, what is the market opportunity? How big is my total addressable market? And second is, at what stage is the business at? You know, if you're looking at a certain opportunity, at what stage is the business entering in the market? Is it a new business entering a market? Is the business already at a growth stage? Like I said, is it already mature? So we need to understand at what stage is the business at. Second is we need to understand the overall regulatory landscapes in your market. And regulatory landscapes are both a state subject and a center subject. And these are typically, I would say, licenses which are required, compliances which are required. So even if you open a pharmacy, you need to have compliances with the drug compliance for your state. If you're opening, say, a liquor business, you need to have compliance with the policies, which is liquor policies, which is very different state to state. And some states don't even give these. And some states, like in South, the cost of acquiring these licenses sometimes very, very high. So we need to understand these licenses and overall regulatory landscape. And the third area is real estate cost and the location strategy. So when I say location strategy and the real estate cost, we need to ensure that the cost that we have for the real estate should be viable for us to run and operate the business, because per square feet efficiency needs to be minutely understood to understand our cost of real estate. So most of the times when companies look at a location, and this is what we also advise, you look at the nearest competition which is there in the market. For example, you want to open a jewelry brand, you want to open maybe a cafe, look at in the market the top three competitions and which locations in your market your top three competition is operating out of. If these three competition is operating, for example, in 15 odd markets in your city, then out of these 15 locations, which are the top three performing locations where their performance is the best? And if you open next to them, your probability of success in that location would be comparatively very, very high. And this is a no-brainer. This is one of the easiest way to find and scout a location. And then comes your competition assessment, which is peer-to-peer competition. So if you look at the competition assessment, we need to look at the competitive advantage that I have other performing brands in that market. I need to look at the penetration of the brand. I need to look at the past performance of the company. And this past performance ideally has to be looked across different formats and different markets. A same brand, even in the same city, would have different performance based on the location they operate, right? So how the brand has performed, how is the penetration of the brand? Is there a barrier to entry? So barrier to entry are, I would say, hindrances that make difficult for a new company to enter a given market. And these barrier to entry can include technology challenges, government regulations, patents, licensing requirements. So these are important criteria to be considered. And finally comes the assessment of the brand that you want to take. So which is a brand diagnostic. So not all franchisors are same. So as a prospective partner, you need to do your research and get to know everything you can about the franchisor, which includes a lot of things, including how long the company has been into operations, what is the average success rate of their business operations. It can be company-owned stores, it can also be franchise stores, and how long, if they have been in franchise business for long, how long their franchisees stay on an average in the system. So what is their churn rate, right? So how many renewals are happening? So all these are important criteria that you should ask the company. And the other elements would include, obviously, the credibility of the company, the commitment of the brand towards the community they are servicing, towards their franchise partners. How standardized are the systems and processes? Because when companies start to scale, they have to become more and more process oriented. And third is to understand the operating cost and any kind of reinvestment which is required to be done in the business. So most of the times, business or entrepreneurs, I would say, they negotiate on the initial investment. They want to negotiate on the margins. They want to negotiate on the franchise fees. But rarely, I've seen people trying to understand deep down the operation cost, which is comparatively much higher than even the investment, right? So operation costs are typically your expenses on rental, your expenses on salaries, your cost of good, your cost of inventory. So there is a detailed unit economics which is done by companies, and there is a science. So every business has an operating cost ratios. So how much of percentage of your overall revenue should go into your rental? How much of that should go into your food cost? How much of that should go into your operating expenses like your salaries? So every category, there is a science, there's unit economics that companies have, and that has to be very, very deeply understood. And when you understand that, compare that with other brands into, I would say, the same category. So when you do an assessment of competition, you should always do a apple to apple comparison, right? So maybe a same category brand being compared with the same category, not overall industry, because even in the same industry, the operating cost structures, the investment requirement, the margins are very, very different. And then comes your legal requirements, because in India, we work on a contract law, like the British contract law. Unlike America, where there's a federal law which is a binding on the franchisor and the franchisee. So the legal agreements have to be very, very watertight. And at Franchise India, we have a separate team which works with our investors to vet these agreements and follow through the entire stage where we work with you to vet these agreements and negotiate these agreements with the company. And finally comes the training and the marketing support which the company is offering to their franchisee. And training is at two levels. One is the training of the partner himself. And the second is the training of your teams, your staff at the outlet. And the companies divide these trainings into two parts. One is the initial training, which is imparted, and then there's an ongoing training every 6 months annually. The companies invite their partners and their teams to retrain and refresh these trainings. So what we do is we follow a three-stage advisory process. We can go on the next slide. So stage one is where we work with you to explore these opportunities. Now, this is information stage. We understand your fitment. We learn about opportunities which are aligned with your strength, your goals, and we take into consideration four important primary fits. So while we work with more than 10,000 companies, even on the website of Franchise India, if you go, there are 16,000 brands who have listed their franchise opportunity, but all these opportunities might not be relevant for you. So what are the most important primary fits? Based on these fitments, our team explore these opportunities and evaluate these opportunities. So these four fitments are S, which stands for strategic fitment, which can be your own profile, what you've worked in the past, maybe some experience that you have on the industry, or it could also be a strategic location that you want to offer. Just before this call, I was on a call with, like I said, an investor, and he had one of the most prime location, 10,000 square feet in Indira, in Bangalore, Indiranagar, and all the top, brands in India, jewelry brands are next to the property. Obviously, the brand which is not existing will come and operate in that property. So if you have a strategic fit, which can be a combination of a great location that you own, or some, I would say, profile experience that you bring. So that is our very first filter. Second is the filter of operational time that you want to put in the business. Third comes the market fit, which means what kind of opportunities would be relevant in the market, and equally the rollout of the companies for that market. And finally comes your financial fit, which is a combination of the investment and the working capital that you want to put. The rule again in financial fitment is 70-30. 70% is the investment that you should keep for the business, and 30% you should keep working capital to be deployed in the business. So this happens to be our first stage where all that information is shared with you. We take a lot of information from you, understand that fitment, and based on that, we go to stage two, which is explanation of these opportunities. So our teams would curate opportunities based on these four fitments. We dive deeper into selected opportunities. We organize discovery days and do a lot of in-depth brand sessions. And then comes stage three, which is, I would say, a stage of personalization where deal structuring is done, a lot of territory planning, strategic onboarding, all that happens in this stage, including signing of the LOI and finally signing of the agreement. So these are three stages that our teams and our advisor take you through. So working, at Franchise India, we receive almost about 100,000 odd inquiries every single month. These are unique investors who look for different opportunities. So we work only with committed investors, and it is a very value-driven engagement. We specializing in helping investors make informed, confident decisions in their journey. So our process is designed to support you end to end, from discovering of these opportunities to evaluation of these opportunities to negotiation and final sign up. So in order to maintain the quality, integrity, and the effectiveness of our work, we exclusively engage with registered investors, and this registration reflects your seriousness, your intent, which allows us to dedicate our precious time, our expertise, and also resources to guide you through a very high involvement and often, I would say, very complex process to sign a business. And our services involved significant time and effort, from opportunity sourcing, financials, operational evaluation, market insights, hand-holding through the negotiation and closure, and very consultative, personalized process that delivers a lot of measurable value, right? So this is maybe I'll let Bharat take you through what it takes to work as a registered investor. We today operate in about 97 cities. So almost every city that you come from, I'll have my local senior advisors or counselors that can in fact meet with you, where we can brainstorm the opportunities, understand your profile. and help you navigate through that 5 assessment tool and help you select the brand. And maybe I'll also read. I see some of our partners have friends have put in some comments. All right, so I can't see. So we have Kanchanji, very good morning and welcome. You're from Delhi. We have Mr. Jay Shah, who's joined us from Hyderabad. Welcome, Mr. Shah. You are a working professional and a doctor. And we also have Mr. Sangam Yadav, who's joined us. I don't know, Sangamji, which location have you joined us from? But after this call, we'll also reach out to you and have one-to-one meeting or maybe a Zoom call, which our teams can line up with you. I'll also request Bharat if you can put a hotline number and an email ID to be posted for our friends. And now, friends, we opened our second part. We have some very, I would say, very important franchise opportunities that we'll quickly take you through.
Ma'am, also, if we could also talk about the events that we have in line, in coming days where people can go.
We'll do that also. Hariji, your question is, are you also offering Amazon franchise? Hariji, currently Amazon has not started franchising their quick commerce business. They've just entered quick commerce, but they have not yet started franchising. They are opening their own distribution centers, and maybe at a later stage when the opportunity opens, we will definitely let you know. But I don't know what city you are from. Uh, I don't see your city. But we have quick commerce businesses like Zepto, which are franchising very aggressively. Delhi NCR is not open because all the polygons in Delhi have gone, but there are other locations that we can help you with. So if I exactly know what location, city you come from, we can definitely help you select these opportunities. Bharat, over to you, please.
Right. So apart from that, I also have shared the number, to contact us.
So Hariji, Chennai, we are open. So Zepto is open for Chennai. So if you're looking at Zepto quick commerce business, Zepto is open. The average investment is about 85 odd lakhs. And the entire business operation involvement, how you infuse that capital, our teams can share it with you. So I have my local teams in Chennai. Bharat, if you can just take these details and we send it to Imran in, okay. Sure, Hariji, we'll come back to you, I think, post this call. And if you can also share your number, I'll tell my team to connect with you after this webinar.
Right.
If
So,
you can just
right, I'll note it down the number, right? Okay.
okay.
All right. So I have noted it down. Hariji, we will get back to you. Our local, the team is gonna call back, after this webinar. By the time, I would also like to inform all the viewers that in case if you would like to get in touch with us, I have shared the number in the chat box. It is 9717683838, or you can also write to us at feedback@franchiseindia.in. So that's how you can get in touch with us, and we will definitely be there to help you explore the opportunities across India with the different categories, right? Now we will quickly move on to, I have invited some of our colleagues to present some brands. It will be a brief introduction about the brand and the opportunity. I would now request maybe, Kundanji, if you could just start, presenting about the Yusta. Yusta is a great opportunity. Let's get an idea about it. And in case if you would have any question, I mean, of course, you can get in touch with the number I have already mentioned in the chat box.
Sure.
Yep.
So hello everyone. So we'll start with Yusta. This is one of the brands from the Reliance Retail Limited, and this is the advantage of or any brand which is coming from a big brand. So this is Yusta, and they are basically focusing on fast fashion, and it is a brand which is very pocket friendly. So it is for the entire family. Everything is there, be it men or women, kids, apparels, shoes wear, cosmetics, everything is there. And I'll just give a brief about something from Reliance. So it is from Reliance Retail Limited. Nearly 19 years of vintage experience they have. Close to 18,836 plus stores they are operating. And as everybody knows about the Reliance, the advantage of people coming and trusting becomes very easy. So Reliance Smart, Reliance Fresh, Reliance Digital, JioMart, the entire country knows about them. The best of the supply chain management, what they have. and best of the apparels and garment threads, and they are into the footwears also. So everything under one umbrella, and which showcases from a pioneer brand, Reliance. So in just close to 3,06,700 crores was the turnover in 23-24. What Reliance has done through all its not only through Usta but all its retail store, and that gives and showcases the confidence what people have from India in this brand. So I'll for as far as this Usta is concerned, I would say it starts from the own property. So the investor should have their own property, and 2.25 crores is the minimum investment which is required. And it is particularly for those people who have good investment capacity, but doesn't have time involvement, to into the brand. So it works on a FOCO model, which is a franchisee-owned company operated model. And basically, the franchisee fee is 5 lakh rupee. The minimum lock-in period is 3 years. The agreement tenure is 9 years. And the requirement for the property is basically it should be from ground floor. There, basically, ground floor is important. So 7,500 or above. 7,000 or above is also workable, but the ground floor is important. The facade should be like 50 feet and all. And they are focusing right now on tier 1 cities. Tier 2 also they are thinking about. And the main competition is basically they are putting it against Zudio kind of environment. So their main intention is to provide a quality apparel, footwear, and everything for the entire family below 999. So it's like 99% of their entire SKUs is below 999, and 95% of them, I would say, is below 499. So 82 plus stores they are operating right now, a very successful brand. And they have a, I would say, scan and go kind of technology they have come up with to reduce the queuing, because they operated and they focused on one thing, that all the customers, wherever they are going for purchasing, what is happening is actually at the end of the purchase cycle, they are in the queue, and somewhere close to 20 odd minutes on an average they are putting and standing in the queue, which is irritating for in the crowd, the customers. So what they have come up with is a scan and go technology. In this, what happens is basically there's a basket, and all the apparels or footwears, whatever the person has purchased in, they put it inside that, and automatically using the RFID and QR codes. The billing happens. The person can using the UPI, they can pay, and they are ready to leave the store. So this kind of advantage also being presented by them. It's on a FOCO model, as I've told you. And apart from that, after that, they are giving the revenue, the commission is basically 15%, 15% on first 50% of estimated sale value. So estimated sale value is basically the brand looking at the area, looking at the which city it is. They do an estimate of what the sale would be, and they give 15% commission on first 50% of the estimated sale value, and 7% commission on remaining 50% of the estimated sale value. Which is good enough, because rest everything, all the operating cost is borne by the brand itself. So it's a very lucrative and very trendy, because today, right now, people, all the youngsters, they are focusing on more and more apparels. For every occasion, they are going for new apparels. So gone are those days where person would be purchasing very expensive thing, but very few in the entire year. The thing has reversed now. The consumers, they want to purchase a new set of apparel, shoes for every occasions, and for there they are basically focusing it.
Right,
So
right.
yeah, that way. So over
Thank
to
you
you.
so much.
Yeah, thank you.
Thanks so much, Kundanji. In fact, indeed, it is a great opportunity. Usta is basically focused on the fast fashion brand. It's a fast fashion brand from the Reliance Industries and Reliance Retail. And the growth is really, expected very high. It is, the projected is almost like 4 lakh crore by 2030. So in case if you would like to be a part of this success journey, you can of course go for this brand. And for this, you can get in touch with the number I already have shared in the chat box. You can connect with us. We'll now quickly, we just have 10 minutes, less than 10 minutes of time. Now we'll move on to the next brand. Shweta, in case if you would like to, start with the pepper fry, right? I'm just, putting this on the screen. Yep.
Sure. Thank you, Bharat sir. First of all, very good morning to everybody. So since time is short, I will be quickly briefing about pepper fry. I'll first segregate it into 4 parts. The first part, I will talk about the company itself, the origin, the founders. Then I'll move about the industry. And in the third part, I'll talk about the USP, why you as an investor should invest in pepper fry. And in the fourth part, we'll talk about commercials and the conclusions. So Pepperfry was founded in 2011 by Ashish Shah and Amrish Murthy. Ashish Shah is also the CEO of the company. Basically, it's an Indian origin e-commerce marketplace which specializes in furniture, home goods, decor, and other home related products. So company generated around 209 crores last year, and it has been backed up by the investors like Goldman Sachs, Northwest Ventures, and Panthera Growth as well. So this gives you a kind of trust to put in by the brands, because these are the top investors who are invested in this company. Now, if I talk about the industry, the furniture industry as a whole, so since India is a growing market, the current market size of furniture in India is around $30 billion. And since India is a growing market due to the increased disposable income, and also the aspirations of the people have increased, there is a more demand in terms of quality products, the services delivered, and the post sale services also. So the brand has been able to fill this gap, and currently they are taking over the market shares for around 63% of the Indian market share, and still 90% market is still offline and unorganized. So there's a huge potential in this market to invest in. Now moving to the second part, why you as an investor should invest in Pepperfry. So first of all, it works on the FOFO model, which means franchisee owned and franchisee operated. And it has as an USP, this brand provides extensive product catalog to offer to its customers. It's backed up by strong logistics and supply chain, and they also offers the customizations for the customers itself. As an investor, you will be having 0% inventory risk, because all the inventories are being kept in the centralized warehouse. You have to, in the store, you have to keep a display unit or called demo unit itself. Uh, to start specifically about the USP, the first would be the marketing support that you will be getting as an first-time investor or who is looking out for this outlet. The second will be operational design. Company will assist you in the operational design. Third is the staff training. So basically, company will be providing one person on the company payroll for 3 months to train your staff itself. Fourth is the hiring. The company will assist you in the hiring, and if needed, company will also assist you by sending a project manager who can look over the outlet itself till the accelerations of the sales happens. So to talk about who represents the brand, so we have Mr. Punjit Singh that who covers the north market, and we have Sanjeev and Sharath Sarthak, who covers the South Indian market for the company itself. Now moving to the third part, that we will be talking about the commercials. So presently, the company has around 150 stores across 100 cities. Like I mentioned, model is already FOFO model that they follow. The area required is 1,000 square feet to 1,000 square feet for the studio setup itself. If I talk about investment, that varies from location to locations, but the company has mentioned 30 to 35 lakhs. If I segregate these 35 lakhs, how it is divided. So 2.5 lakh will be the franchisee fee. Inventory will go around 6 to 7 lakhs depending on the locations. Interiors will come around 10 to 12 lakhs, and remaining will be your IT assets, your softwares that will come under 6 to 7 lakhs. So in total, it's a bifurcations of those 30 lakhs. The agreement will be for 5 years, and 3 years will be the lock-in period, and there will be no renewable charges has been taken by the company itself. If I talk about staffs, there will be 4 staffs you will be needing as an investor. One will be the manager, 2 will be the consultant, and 1 will be the housekeeping person. Monthly rent that you can expect to incur will be around 75,000. The facade length will be 25 feet to 30 feet. And if I talk about the fit outs, it will be 1,500 square feet, depending on the per square feet cost of that particular locations. If I talk about the commission for the franchisee, it will be around 16%. Monthly sales that you can expect will depend on the locations, but it comes around 20 to 40 to 50 lakhs. Payback period will be between minimum will be 18 months and a maximum it will go around 24 months. So now, so moving to the fourth part, as rightly said by Sonia ma'am, I would say that we actually help investors through our SOMF model. So what does SOFM model represents? It's basically we will help you choose a brand which is strategically align with your investments and your interest. And that means strategically fit, operational fit. At the same time, that also help you to find a marketable brand where you can approach the customers and also can understand the investment that you have put in the brand is also fetching you the kind of return that you are expecting. So we will be helping you in bearing the all the formalities,
Right.
and we will also help you reduce your rental your risks as well, sir. So
Right. Thanks so
it's a
much.
very good opportunity.
Thanks so much, Shweta. Indeed, it's a great opportunity. In case if you want to go with any of these 2 brands that we discussed today, you can connect with us on the number we have shared, in the chat box. It is 9717683838. Apart from that, we do this webinar every Thursday. In case if you would have any kind of problem, or anyone in case if you'd like to join this webinar, you can join this on the Thursday at 11 in the morning. So I think that's it for the day, everyone. Thank you so much for joining. I would really appreciate Kundanji, Shweta, Sonia ma'am, Akash to join this webinar, helping everyone understand the important aspects of franchise business. So that's it for the day, everyone. See you next week, Thursday at 11 o'clock in the morning. By the time, in case if you would like to get in touch with us, numbers are there, email ID already have been shared in the chat box. We will be waiting for your call. So that's it for the day, everyone.